Welcome to a Market Matters update. Shawn, let's kick things off with interest rates. We're expecting the decision in the next 45 minutes. What are you expecting from the RBA today?
Well, as I said in the morning report, I think no change. Most economists think no change, so to agree with the economists is always a bit of a concern for me. And one thing that crossed my mind over lunch, which was only a very unexciting sandwich, was I thought, well, if ever the RBA are going to have some exposure to the general public to cut rates, it's actually today, because everyone is talking about this. I've had so many people call up today, what do you think about the rates, what do you think about this, blah, blah, blah. Hence, in my morning report. But I think they won't cut rates. I don't think they should cut rates. I think they should keep that 0.5% up their sleeve. But it actually did cross my mind, if the RBA want to really kick things up and get the public maybe out there shopping down the mall, maybe they'll cut rates today. So I'm 70-30 saying they won't cut rates, but I wouldn't be surprised, you know. They should cut rates twice this year, at least in my opinion. The bond market is the smartest market out there. The bond market is where the big professional money goes. The bond market says we get at least 0.5% rate cut this year. I think they're right. And as I said in my morning report, that means that the banks, the interest yielded stocks that are high quality, will pay a dividend, are still very, very cheap. But overall, do they cut rates today? Toss a coin. I don't think they will, but I wouldn't be surprised, which is a bit of a, I'm sorry, a bit of a on the fence answer.
Yeah. On the market front, we bought a bit of NAB, just your half size in terms of what you usually trade.
Yep.
Also bought some Telstra recently. You have been talking a market correction sometime in the first quarter, if not in April, if it doesn't happen in the first quarter. Market has really ticked up at a fair rate of knots. What are you seeing here? Do you think we got another couple of 100 points, or do you think it will start to unravel sooner rather than later?
Pretty much, again, in line with my weekend report, and please make sure everyone reads these things, because that's when I spend most of my time without the phone ringing, without people talking to me, putting my thought into what the market's doing. I think we're going up at the moment. My view on the market correction, I do clarify, has always been on the US will correct 10 or 15% early this year. I'm still 50-50 whether it will do that. But the really interesting thing, which I didn't pick, was that they've fallen 5% and we've gone up almost 9 or 10. That I did not pick. And that's because we are now getting that big, massive money chasing Australian yield basis, the Aussie dollar falling down to say 78, 77 cents. And that trend is an established trend. That can last a long, long time, another year or 18 months. And that's why I bought Telstra. That's why I bought NAB. Yeah. They're good quality stocks that will pay a dividend, and I wouldn't be surprised now if our market is going to blow off to 57, 5800.
Okay, awesome. And you know, we're out of it at the moment, but a quick update on gold. Had a lot of inquiries regarding it. Gold hasn't hit 1400 yet. You know, should I be buying gold stocks still? I still think there's more to go. Well, a lot of people think there's more to go. What are you seeing there? You know, is it still potential for a bit of a trade?
Look, people love gold, especially when it's going up. But then again, don't we all like things that are going up, especially if we own them? Gold has passed. The easy money in gold has gone. So we bought gold 3-4 months ago.
Yeah. Well, November 15th, I think was the date.
Okay, well obviously November 15th is the date. Thank you for that. And we've had a phenomenal return. You know, absolutely phenomenal return. The easy money is gone. I'm not even looking at gold or gold stocks now.
Yep.
I'm not interested. I've moved on. I'm not saying it falls from here. I'm not saying it goes on from here. The easy money's gone. Look elsewhere is my personal view.
Yep. And one last thing I thought I'd ask for viewers. In terms of your trading, now you've got two accounts, a trading account and your self-managed super fund. What are we actually seeing in Hickman's positions, and what are we seeing for the alerts? Is that your trading, or is that your SMSF, or is it a mixture of both? Or what are you doing intraday, given you're watching the market the whole time and you're transacting on a regular basis for clients and yourself? Okay,
that's a great question, Nick. My alerts, my positions are my self-managed super. Okay,
yep.
First and foremost, not negotiable. 100% my self-managed super. I would clarify it's quite an aggressive self-managed super compared to the average person's, because I sit there and trade all the time, or I invest. That's my business. My trading account is a very aggressive sideline, from a better way of putting it,
yeah.
And I might trade 20 times in one day sometimes.
Yeah.
So that really is not relevant to anyone. If the average person was to trade 20 times in one day, all they're going to do is make their broker very, very happy. And I strongly recommend you don't do it. So everything you hear from me is my self-managed super, but the good thing is it's an aggressive self-managed super, so it kind of satisfies people with SMSF,
yep.
And it satisfies traders. It's in between the two.
Okay, awesome. Thanks for that update, Shawn, and thanks everyone for watching.
Pleasure to see what happens in half an hour.